The monetary order changing, breaking down in a certain way. Domestic political orders changing. Geopolitical order changing. Gold is up about 65% from a year ago and down about 16% from its high. We are quite close to capital war. World order has changed. How that is done, to use Donald Trump's expression, is really who's got the cards.
Would regime change in Iran make this region more investable?
Yes.
Ray, welcome again to Dubai. It's great to see you, sir.
Thank you. It's always great to be here.
So let's talk about what's happening in the markets right now, because you have been a macro investor for the better part of 50 years, Ray. When you look at the market gyrations right now, what are the 5 forces that are ultimately driving what's happening at the moment? Because we've seen a lot of volatility through January and the start of February.
Well, thank you for the question. Yes, and the 5 forces. I'll just... One of the things that I learned back in 1971 was that things that surprised me quite often were things that never happened in my lifetime, but happened many times before. Back then I was a clerk on the floor of the New York Stock Exchange. I just graduated college and I was about to go to graduate school. And 1971, Richard Nixon on August 15th got on the television and said that we're not going to give you your gold, defaulted on the promise to be able to turn money, cash money in for gold. And I walked on the floor of the stock exchange the next day thinking that this was going to be a great crisis. And the stock market went up. I thought it was going to go down, and I studied in history devaluations. That's the first I was through. And I found that in 1933, Roosevelt did the exact same thing for the exact same reason. I understood the mechanics. And I studied the 30s. And because of that, I was able, and Bridgewater was able, to anticipate the 2008 financial crisis, the European debt crisis, and so on. And so I studied history. And I just recently, about 5 years ago, studied the last 500 years of the patterns of history, particularly on reserve currencies breaking down. And I realized that there is a great cycle and 5 big forces. And those 5 big forces are, first, the money, credit, debt, economic machine, that there's a certain way of that machine operating, and I'll explain it in a second. The second force is related to the economics, is the internal political force in which when there's left and the right emerges and there's periods of great conflict. In the first, just to make it very simple, there's a debt cycle, there's a big debt cycle. And the way it works is it's the same for countries as it is for individuals, except countries can print the money. If your debt rises relative to your incomes and your debt service payments begin to squeeze your spending, you have a problem. And if you have a lot of debt to sell, one man's debts are another man's assets, and you have to sell that, and if there's too much that they own and you're selling a lot, there's a supply-demand problem. And that's happened repeatedly, and that's what's going on now, in a way that didn't happen except for the 30s. So we also have then the political. When the left and the right, there are large wealth and values gaps, and so they become irreconcilable differences. You get populism of the left and populism of the right, and so the economic cycle is very much tied to the political cycles. That's the second force. The geopolitical cycle. In other words, by the way, all these cycles started really in 1945. The geopolitical cycle. There's a world order. In other words, the world system. And that was dominated by the United States and its way of operating that was a multilateral system. The idea of the United Nations and the World Trade Organization, the World Health Organization, and the World Court, and all of that multilateral, which is breaking down now and to become more of a unilateral power type of world order. These three orders, all orders, the monetary order, the political order within a country, the geopolitical order through time, have gone through these cycles, and then roughly about once a lifetime or so, they break down for these reasons. And then number 4 is acts of nature. Droughts, floods, and pandemics have killed more people than wars and toppled more orders. And then number 5 force is always through history, technology. Big technology leaps which have the effect of raising living standards, but also being used as weapons for war. So there is that big cycle. In my opinion, as we're looking at, and many people very surprised at what's going on, this is more like watching a movie happen over and over again. You know, history does rhyme. And so what we're seeing is the monetary order changing, breaking down in a certain way. We're seeing the domestic political orders changing, certainly. And we're seeing the geopolitical order changing in a very important ways. And then, of course, technology will have and is having a tremendous effect.
Ray, what would you say is the safest store of wealth today? We've seen huge volatility in gold, a significant run-up followed by an historic sell-off. Can you offer your perspective on what's happening with gold and silver right now?
The money is supposed to be a medium of exchange and a storehold of wealth. And right now, there's a questioning of how it will be a storehold of wealth and that questioning is leading particularly to the accumulation of gold, particularly by central banks, although it's gone to sovereign wealth funds and it's gone to beyond that, because the question is, what is money? What is a storehold of money? In 1971, as I described, there was the breakdown of our monetary system where there was a link to gold, and then the world created a fiat monetary system. In other words, where it's easy to print money. And as a result of that, we have a lot of debt, and one man's debts are another man's assets. And so there is the dynamic that I was describing. And so the question is, from that supply-demand, there's a lot of risk associated with that. But also, historically, when there's great conflicts, there are worries that those capital wars can develop. In other words, in history, in like World War II in Japan, prior to the war, in the United States and Japan had a contentious relationship, and the United States sanctioned Japan, meaning they didn't pay their debts. One could imagine an analogous situation here also in this world today, I'm saying, between China and the United States, or even it's been conjectured and talked about by leaders in different countries about U.S. and European dependency. Because the reverse of a trade deficit, and we hear a lot about trade wars, is capital, that there's a capital imbalance, and capital could be used as war. So the question really is, what is a safe storehold of wealth? So naturally, gold has been the most used, and prior to 1971 was the choice, and it has unique characteristics because it can be, most others can be controlled or would not be used by central banks. So I think when you say, what is money? In reserve currencies, gold is the second largest reserve currencies. I think if people were to make those who are running policies and so on were to say, they would say gold is the safest money in this kind of an environment.
Still the safest.
Yeah, it doesn't change by the day. You know, gold is up about 65% from a year ago, and down about 16% from its high. And I think people make the mistake of thinking, is it going to go up and down, and should I buy it? And instead, not whether it's individuals, but even more importantly, perhaps central banks or governments or sovereign wealth funds should say, what percentage of my financial assets, what percentage of my portfolio should I have in gold? And think about that percentage. And then if the price goes up and down, if it goes up too much, you sell out to get back to that number, it goes down too much. But to keep a certain percentage, because it's a very effective diversifier to other parts of the portfolio. I think that it's best to say, if you didn't know what markets were going to do, what should my allocation be to different markets? And because gold is a diversifier, in other words, when the bad times come along, it does uniquely well, and when the good times are prosperous, it less so. It's an effective diversifier. So I would say that perspective. I'd say the most important thing is to have a well-diversified portfolio. So I'm not saying run out and buy gold and hot because the market's going to be hot, but more to think strategically about what is the right mix of assets to own, whether you are an individual or a central bank or a country or a sovereign wealth fund.
Ray, you mentioned capital war. Do you believe that we are on the cusp of a capital war? So much of the market focus right now is on the president's trade and tariff agenda. We often talk about the implications of the trade war that we see unfolding. What about a capital war?
We are on the brink. That means not in, but it means we are quite close to, and it would be very easy to go over the brink into a capital war, and because there are mutual fears. For example, if you were to take the conflict even over Greenland related to Europeans and the United States, there could be a fear that European holders of U.S. denominated assets could have that they could be sanctioned in a sense. They might have a fear in one way or another, and there could be a reciprocal fear on the part of the United States that it could be not get the capital or not get the buy. This is very much similar, by the way, to the UK during the Suez crisis. So capital, money matters, in world. Money buys the military equipment, money matters. And the strength of that money, the reserve currency, and also the willingness to use it, both to make the purchases and so on, the ability to do that, but also the willingness to use it as a leverage. We're seeing capital controls and capital war is taking place all over the world today, and who will experience that is questionable. So we are on the brink. That doesn't mean we are in or close, but it means that it's a logical concern. One who studies history understands that, for example, foreign exchange controls, capital controls are normal. They're the normal things to happen in environments like that. And so naturally, in preparation for that, or to protect oneself against that happening, countries, sovereign wealth funds, central banks, and individuals are making those kinds of provisions.
Ray, let me ask you about the situation in the region as well. It seems as if there's a big debate in Washington, D.C. right now about how to approach the situation regarding Iran. Whether or not to strike is obviously a key consideration for risk asset holders and, of course, policymakers in our part of the world. When you look at the situation around Iran, what's your perspective from a macroeconomic lens, and what is the risk of a hot conflict to your mind?
Well, I have both this big cycle perspective, meaning I recognize that the world order has changed from one that was a multilateral world order which was an idealistic world order because, there were these organizations and they have all representatives and they're going to vote. but the power is what matters most, and the power being in the hands, particularly of dominant powers like the United States and China, when the consensus is not the same as the interest of the dominant power, it was logical that what we're having now is a power-based world order, much the same as existed throughout history prior to 1945. So now we're dealing with power. That is my, let's say, bigger picture view. And then how that is done is, to use Donald Trump's expression, is really who's got the cards, who has what powers. And so we will see then the tests of those powers in the various ways. Then we get into complicated subjects, but also it again reinforces the notion of diversification because, and the power of neutrality. I want to say that in history, in periods such as these or wars, there's winners of wars, losers of wars, and neutral countries. And the winners of wars lose. They lose because they get themselves deeply in debt financially, and they have whatever the scars of the conflict are. The British lost, and so on. The United States lost also. But the losers of the wars get wiped out. Everything changes and they lose control. Those who do the best are the neutral countries. They actually profit from the wars. The United States, for example, in both of the last world wars, entered late and earned a lot of money. And so if you look at so I'm just generally speaking, I think geographic diversification is important. Knowing how to deal with what you don't know is very important in markets, how to diversify well, where there are places. There are basically, I would say there are three things that make a country successful. Simple three things, really, through history. That is, first of all, educate your population well, not only in terms of their ability to be productive and earn money, but also civility. If you raise your children that way, we all want to raise our children that way, and you have a community where they come out in that way, and that they can work well to be together to be productive with laws and whatever that way of being productive is. So number two is come out to a society where there's ability to be productive and not fight as much, and then avoid both internal wars, sort of civil wars, and international wars. If you could do those things, you can have a prosperous country. And so when I'm looking at the UAE and the region, really, in the Gulf and so on, I think that those are the great capabilities, and one hopes that they stay out of the military wars and they continue to have that kind of prosperity. Then you get down to tactical things, and then you have to react. But diversification for what you don't know is an effective strategy.
Just on this, would regime change in Iran make this region more investable?
Yes.
You think so?
Well, I think the region is very investable, and I don't think that there's, I think look at the miracles of what's happened. And so I invested here, and I think it's very investable. But to the extent that there's peace and that there's the dream of being able to have everybody operate in a manner that's productive and has education, these ways that I mentioned that countries operate in. Obviously, the conflict with Iran is a big issue, and all I'm saying is if peace was, whether that's regime change, it would seem to be, but I'm not, again, an expert on the geopolitical, but I would say whatever is bringing about a greater stability and a greater harmony, I don't think it's greatly affected it, but it has affected that perspective.
Ray, we really appreciate your insights. We have about a minute left, so I wanted to get this question in because we are, of course, here at the World Government Summit. Ray, what would you say is the biggest challenge or risk facing governments in this part of the world through 2026 and beyond?
I would say just keep doing what you're doing. I've been coming to Abu Dhabi since for 32 years, and I saw how it was raised by Sheikh Zayed, and I've seen Dubai. And it's the three main forces that I described to create an environment of civility and vibrance in which people can have the freedom to be creative together. My son, I have a son and daughter-in-law, 3 grandchildren. They go to school here. The schools are good. It's stay out of the wars. Just keep doing what you're doing.
We'll leave it on that positive note. Ladies and gentlemen, congratulations on another fabulous event, and please thank Mr. Ray Dalio.
Thank you.